Yeah, I think there's a lot of positive signs overall, but at the same time, I think I'm pushing people to consolidate down into like projects with value, projects that like actually have like a burn chart of sustainability.
Yeah, they've got some economic drivers.
Right.
No,
Yeah.
I'll tell you what, it's Chris and I go round and round, Chris Carrique, because he's a crypto guy. He's my partner. And he's a little younger, and I've known him 25 years. And I said, hey, there's a place for Bitcoin. There's a place for Ethereum.
Yeah.
I said, I'm not even looking. I said, I'm really not looking. Maybe the top 5.
Yeah.
I said, but I just can't get tied in. And the world is going. The world has accepted Bitcoin as a form of currency. Let them. Yeah. Let them. If it has a value and you can't trade it, but my money can find a better investment. I think
so too.
So.
Yeah, no, it's especially this week with like the Facebook announcement.
What? Tell me that. I'm not up to speed on it. Run me.
So it's Facebook's what they're they've got 2.7 billion users across WhatsApp and Messenger and Instagram and Facebook itself. So what they're trying to do is have a collective, unified payment solution or, like peer-to-peer payment solution for all of that, unified across. That's sort of the front end, and that's what everybody was talking about. It won't be launching for at least another year. They're already getting regulatory pushback from like the US and Russia and, India's banned cryptocurrency. So there's a lot of markets it's not going to be able to get into, but and you're going to have to use KYC to be able to use it, which automatically
database grab. Wow, but they already got the database anyway.
That's the thing. You're not paying fees like Bitcoin, where you're paying a little monetary fee. The fee you're paying is for privacy and data. Because to me, like this week was a very significant event in history, not just because of what Facebook is doing, but what we're seeing right now is big tech is realizing just how like powerful, how like, how much inherent like capital formation possibility you have when you know what a consumer is going to do before they do it. There's a lot of power in that. For every user that Facebook has, I've read, on average, there are about $16 worth of value for every person that they've got. And so you can
just based on the data points.
Exactly.
Yeah, and when you think about these monstrosities getting involved in the finance game,
yes,
I don't see it. I don't. Maybe getting into a coin for our own services game, but a big thing on Wall Street is you've got to know your business, and you've got to be in it.
Yeah.
And for companies that diversify too far outside of it, I think, and if you look at it like this, nobody has a problem buying a book or a hard product online.
Sure.
Right? But will they buy their insurance online without support of 10,000 Geico representatives to answer the question?
Yeah.
Will they buy stock online? They may, but there's 10,000 E-Trade representatives, all stockbrokers to service it. So what's happened is, I believe that in the capital formation game, they're still going to want a little personal interaction. We can simplify it down to nothing. But when you look at the monstrosities getting involved in it, when they cross over, and I don't think they will, now they become regulated as financial institutions. And I don't know that Google or Facebook want their subsidiary, because of a link, to cause securities regulations to apply to the rest of the business. I don't know.
I think you are on the money with that. I think what they're going to be doing is plugging in sort of the back end for like, eventually the secret weapon of what they're trying to build here, at least Facebook, is it's a service called Colibra, which is the wallet for the Libra token. But they're going to be building in loans. They're going to be building in, the ability to, I guess eventually buy stock and whatever. I'm sure they're going to be doing all that in the back end through a, like a Goldman or a Fidelity.
Right. The back end will be facilitated by the pros.
Right. But like the front end is going to be facilitated by these tech companies so that they don't have to be exactly regulated in the same sense, because I'm sure, especially in the sense like avoiding antitrust, getting broken up like that, like trying to stay away from getting regulated like a financial institution. They just want to provide you almost like an app store experience in terms of like, here's all your financial tools, right here, and we're going to make it super simple, Robinhood type experience,
right.
But like everything right in one place. And to have all of that and the consumer data built into all of that, that's, I think that is significant. So I think you're right in a lot of sense. People aren't going to give up their banks tomorrow. But if Facebook can replicate like half of what a bank already services someone today,
cheaper, right?
Yeah, or just more convenient for them. If they can just do everything from their smartphone and it's easier,
that's adopted.
That's pretty compelling. Yeah, but like I was saying, you have to use KYC. Not everybody has a smartphone. Not everybody has that internet access. Not all countries will allow it. So it's still going to be a slow adoption thing. But the most important thing I think for our space is Facebook is really doing us a favor in the sense of getting people to rethink their relationship with money, how to use it, what you can do with it, the power of a digital currency like this. So it helps to begin that conversation. Like,
it's like dropping a Trump Towers into a security token offering.
Yeah,
it brings legitimacy to the market.
Yeah.
To all of the unknown. Facebook's doing it, must be all right.
Exactly. Yeah. So, I think that's a good segue into the security token marketplace, because that's exactly what we're looking for too. We're looking for some legitimization. We're looking for, true regulatory
right
working with us. I think we're on the right track. We're still a couple years out, but everything at this point is convincing that it's exactly how we've been talking about. We've got the tech stack mostly there. It's more about the regulation and more about the adoption at this point. But the opportunity is still massive.
Show you something funny. When I was getting ready, I went into my office. How long ago does this feel like?
Oh, it's a good book.
It's the first book, dude.
Yeah.
I was in my office. Here, Charlie, look at this shit. Underlining. You remember when we were all trying to learn?
Oh, man. Yeah.
And this was a great book. When was this published? Tapscott. He set his son up to almost be an authority in the space.
Yeah.
Where the hell?
So talk to me, like, what is, how is Pref doing? What are some of the, has there been any response to the SEO wizard, push that you guys been doing?
Incredible. The video, I tell you what, we should have done it a long time ago.
Yeah.
The video was long in nature, 6 minutes, but it gave a true issuer investor experience on a step-by-step basis. And we've had overwhelming response to, this is easy. And I'm like, wow, okay. We've been trying to say that for a long time. But I was just on an interview an hour ago, and I'm dying to get into really explaining our marketing plan, because the host had an aha moment too.
Mm-hmm.
And I think the world's ready to have one. Like we were just talking about Facebook.
Yeah.
I see this as that the video opened up a lot more response. People are beating down our doors. I'll go into it. Our rephased delivery. It's not about security tokens. You, me, and everybody else who experienced the ICO era, who experienced the power of distribution through that platform.
Mm-hmm.
Okay, $20 billion being raised up. Okay, and it's not the security token. There's three primary components that are democratizing the capital formation process. Us little issuance companies are just bringing it together. Jobs Act. Hey, Charlie, all the laws had to change for security token offerings to be done on an exempt basis, exempt from registration.
Mm-hmm.
The Jobs Act jumpstart our business startups.
Mm-hmm.
Had to come to be. That was only a few years ago.
All right.
Now, you and most of the young guys in this business never realized that before 2016, you couldn't advertise a securities offering.
Mm-hmm.
It had to be, that information had to be disseminated through a registered broker. Now, okay, Jobs Act equals advertisement, access to a global pool of investors. The laws had to change. 2, blockchain and smart contracting provided for a platform, mass distribution to that same global pool. Without the ICO market, the STO market would have never become even a thought. Then couple that with low-cost digital ability to advertise. All PrefLogic did was put it neatly together in a package. But it's those 3 components that now empower my neighbor and every other average individual to utilize capital formation to the pursuit of his own personal financial progress. That is where I think, you asked me a couple questions online. You asked about how we're measuring up to the competition. Charlie, we don't have any. Okay, our competition, and respect for a good half a dozen of them.
Mm-hmm.
What do they look like and act like? They look like and act like broker dealers or investment banks who are financing traditional companies.
They're going after big fish, yeah.
Okay, now, if we look at the entire ICO marketplace and all the companies or projects it served, there was approximately 5,500 ICOs done, correct?
Mm-hmm.
Okay, in the last 4 years. That means if PrefLogic or our competition were the only STO issuance platform and that market was to heat up as fast and hard as the ICO market did, then my market capacity over 4 years is only 5,500 copies of software. Think about it. Do I want to approach that market? No, I've always seen the opportunity to, let's just look at the US marketplace and who can be empowered with the ability to raise capital through our tool. There stands 50 million individuals, 35 million that own a home-based business, and another 18 million that are direct marketeers. They all have customer bases, they all have email addresses, they all have circles of trust and influence like you do with Ready Set Crypto. And if they wanted to fund their entree into the real estate industry as a real estate investor, only they want to buy one property in Western New York in the city of Buffalo, 150,000. They can raise that through their warm market with this tool, quick and easy. What does that do for them? Well, let's think about it. If the average home 30 years ago in the United States was worth 80,000, and today it's worth 200, that's a 150% increase. The 80 is now worth 200. So an individual under that example would have raised 80. The asset turns into 200. And let's say he shared half of the back end with his investors. He would have yielded a $60,000 return without money at risk while providing all of the front end cash flow to the investor. The beauty is he can structure his deal any way he wants to serve his client base, which are his friends. So in real estate, what we'll do is offer turnkey situations to fit that market so that he can go up and say, "Hi, Aunt May, I'm going into the real estate business. I'd like you to invest with me. 100% a year as 100% a year investment is collateralized by the real estate I'm purchasing with your money. I'll do all the work. You can have most of the front end income off the rent roll. We have no mortgage, and we'll split the back end. What do you say?" Mm-hmm. Well, what exists to make that sale is trust, value proposition, collateral, and sharing. That's an easy sale. Now, Charlie, what's 1% of a 50 million person market? And that's only a market. The only market I'm pointing at right now is a market that already sells themselves and a product to an aggregated audience called a customer base.
Mm-hmm.
Where they can exchange that for, I'm selling you me, my labor, and a share of the profit. 1% of that market represents 500,000 copies of software sold. That's only in the US. Compared to, let them chase the 5,500.
Yeah.
And they're chasing it at high fees. You know their models.
Mm-hmm.
Low cost acquisition and ability to access capital. That's where we're at. That's where we're focused.
I think, especially over the next year or two, I'll be very interested to see sort of the KPIs, the results of when we start to compare, how traditional capital formation is done today, the costs incurred versus the efficiency of that. And when you open up to, first off, reducing the costs through just, a digitization process, giving you access to a global liquidity pool, so giving you more access to more investors. And what does that do? If you can do apples to apples, if you do a paper process versus a security token raise, you're going to raise 57% more, something like that. To see that sort of metrics in place, and at the same time, you're going to raise 57% more, and you're going to save 100% or whatever of the total.
Well, when you look at it, and you make this application in real estate, right?
Mm-hmm.
An individual's raise will be relative to the strength of the network that trusts him. Mm-hmm. You've got 120,000 people that trust your advice. My neighbor might only have 1,000 mixed into his email, his cell phone, his LinkedIn, his Facebook, but they trust. Now, past that value proposition, people want to see credibility. Mm-hmm. So after he's raised the capital, he needs to do one thing right: buy the property right. And a month later, he's sharing the rent roll. And now that's where the broad-based access to a worldwide audience starts to mean something, because it's, hi, I'm Joe. Hi, I did this. Hi, my investors made that. I'll let you participate at the same terms. Now I've got credibility. Not unlike, we were just talking about Facebook and credit cards. Not unlike eBay, where the vendors are issuers and the crowd measures their ranking. 5-star, 4-star, but in a transparent world, the good will be found out quick and the bad will be found out quick.
Absolutely.
So I'll let you lead the interview. I took up 5 minutes there, but you go ahead.
No, this is perfect, because I'm also going to be doing a video on tokenized real estate, just like back to back with, like current state of SEOs, tokenized real estate, because they go really well with each other. And when you spit out statistics like, at least in the US, to my knowledge, 90% of millionaires are made because of real estate. You start putting that in the context of, people's retirement, especially people my age, and saying, look, you don't have to acquire an entire piece of real estate to be able to participate in this brave new frontier of, tokenized real estate, tokenized assets. You can start putting away, parts of your income, pieces at a time, and get dividends back in terms of, rental, split or whatever.
Well, what it does is where the ICO world, that's grinding itself back to a $300 billion market cap, entertain the high risk dollars of an asset allocation pie graph.
Yeah.
Okay. When you go to see your investment advisor, you're a 30, 40-year-old guy, you can take a little bit more risk. When you're 70, you want no risk, you want cash flow. You take an individual such as yourself, and we use our $80,000, $200,000 appreciation in real estate. Realistically speaking, you could use your audience today to raise $5 million, put it to work properly, achieve the national average over the next 30 years, okay? Mm-hmm. Place a property manager, wake up 30 years from now with a multi-million-dollar retirement account funded without your labor. Real estate keeps pace with inflation. Property values go up. When I was in grade school, Charlie, I remember answering this on a test. There were only 2 billion people in the world. Today, there's 7.3 billion. How many are going to be in the world 30 years from now? They all need a roof over their head. So real estate fits. I guess what I'm trying to say here is leaving the security token out of this. We're most excited because I see a market. I've explained this to you before, but my wife and I have 5 children. 4 of them are 23 to 33 years old, all economics, finance majors, okay? Their future economically is not as bright as mine was. There's not as much opportunity for them as there was for me. Mm-hmm. Now you roll this into it, giving them an opportunity to take control of their financial destiny by rolling up their sleeves and participating in a venture with their friends. They're helping themselves, they're helping their friends. And what happens when an investor goes, I like what you're doing, Charlie. Can I do that too? Mm-hmm. Sure, and I'll show you how. So it starts to multiply. It's self-promoting, self-fulfilling. So what we're most excited about is empowering that segment. I look at it more as using those components, the Jobs Act, the internet, and blockchain and smart contracting to reduce costs, improve efficiencies, lower barriers, and provide power to a market that really, really needs it, and a market that can really benefit itself by using it. And I think that's where adoption takes place nearly as fast as the big week we're having with Facebook, legitimizing our space, so to say.
Yeah. So. Yeah, I think it really is kind of cool to see it all kind of coalesce around, this is part of a larger technological movement
coming together.
Right? Yeah, exactly. All right, so talk to me a little bit more about Pref. What is the big thing you guys are pushing right now? What is your big objective right now?
That we roll out the tools here in a very short period of time, 90 to 120 days. Mm-hmm. Here's our objective. Simple, easy to use, executable by a high school student. It has to reduce the complex to the simple. The video displays on our website, the video displays a lot of that. You saw it. It's point and click access, and the instruction behind it has to be crystal clear. Okay, we don't want this world, this young generation doesn't want, they want it quick, they want it now, and they want it easy. And that's what this tool has to provide, is capital access, in a regulatory compliant fashion, in simple, easy fashion. That's our big objective, is to shine up the technology, and our first product introduction in real estate where anybody can use it. That's that. And don't think we're not nervous about it, okay? Because every time we take a look at it, we go, okay, we can make that simpler. We can make that simpler. Because it's just the understanding. Nobody wants to hear about blockchain, smart contracting. The issuer. My neighbor wants to know, can I use your product to raise $200,000 and follow the instruction on Property Brothers? If I can, I'm in. If I can't, millions of people watching that show, Charlie.
Yeah.
What if you put an advertisement on that show that says, hey, folks, many are only missing the capital. We can show you how to get it. Go to proflogic.com. How many people are going to click? Yeah. That's it. So that's simple, easy, executable by a high school student. That's what we want.
Is there, so we've talked a little bit about real estate here. Do you think that is the easiest way to sort of conceptualize how to talk about security tokens, tokenization in general, how to be an issuer, how to take part in this capital formation process? Or is
fill in the blocks.
Gotcha.
Fill in the blanks. Here,
Yeah.
what am I selling? I'm selling empowerment.
Yeah.
I'm selling early retirement. I'm selling take control of your destiny. I'm selling part-time, commit this much time. The reason I like real estate is because you can track performance over the last 50 years. Real estate's appreciated 3%. It's kind of hard to goof up. The business model is defined. purchase right. But even if they make a little mistake purchasing, remember they're going to start out marketing themselves to an audience that knows them. Those ingredients are required. Trust. Okay? Friends will trust. Business plan. Asset backing is important. Would you rather buy $10,000 worth of your friend's pizzeria or 10% of a $100,000 real estate proposition for $10,000? I'll buy the real estate. I'm not buying the pizza business. You're 25 years old. You're going to screw the business up. It can't work for you when you're sleeping. Real estate, like you said, 90% of the wealth generated or created over time or represented by the millionaires, billionaires, held in real estate.
Yeah.
So yeah, simple, easy, executable. One where their customers can have confidence in what they're purchasing. We want to make it slick and easy. But we're not talking about blockchain. We're not talking about how the smart contracts regulate this and do that. No, we're talking about empowerment. We're talking about real estate. And we're talking about early retirement and passive income. Mm-hmm. We're just facilitating it with our tool.
Yeah, I think that's awesome. And I think that's exactly how you have to when you talk about using a tool for something, you don't describe what a hammer is. You talk about what it can do for someone. You talk about how this is impactful. I mean, this is, to me, like the last frontier of digitization. This is a clearly paper process that no one really cares about their mortgage contract or the deed to their house or whatever. They don't care about touching that. They care about the actual asset itself. And so having it represented on paper or as a security token, it doesn't matter to them. So long as it's a easier process overall, that's what I think are going to be, like you said, just point and click. If it's that easy, I think people will definitely gravitate to it, both in the user side, but also the issuer. So yeah, I think there's lots to get excited about, and it opens up so many possibilities. So having your background and then working with Pref, what has most surprised you about as the security token industry has sort of evolved? It's still in the early stages of things, but what has most surprised you about it?
I can't say a lot of surprises other than the coming together of those three components.
Yeah.
Other than being very thankful we saw that early, you saw it early.
Yeah.
When you look at it, that all had to come together. And what excites me is the empowerment. There's not been much surprise. Okay. Mm-hmm. Here's how the SEC says your token has to comply. We didn't have to invent anything there. We just have to follow the rules. Here's how you can build onto the ERC20 platform. We didn't have to think about a whole lot, just had to integrate it. Here's how you leverage the Jobs Act. It's right there. Okay, and then again, not as much surprised as I am excited, because young people, and who made the ICO world what it is? The 25 to 30-year-old demographic made up 75% of what participated in the crypto marketplace. And where'd they do it? They did it by their phone. Yeah. Those same people would never have purchased stock from E-Trade. But for some reason, they gravitated to this proof concept, the distribution power, the billions of dollars that can be raised by themselves. I love the regulations involved. I think it does more to bring credibility to the marketplace, investor confidence, and we're in for some exciting times, and I'm thankful I'm part of it.
Yeah, I think that's. I've definitely had the same reaction. It's not so much that it's surprising as an industry overall. It's surprising how, exciting. Yeah, like the opportunity here is just so tangible. It's so once you get that, this isn't really changing too much, but it is changing a lot at the same time. That's what excites me, being a part of it. Do you feel, the common rhetoric I hear over and over again is that the biggest thing holding the industry back is the regulation. I feel like that is a little bit of a contentious divide because, obviously the U.S. market is the most coveted on the planet, both good and bad, I suppose. But for the most part, it enables us to have a very rock solid capital base, I suppose. There's no question as to the strength of the U.S. dollar.
Well, I'd like to interrupt. Thank the regulators for that.
Yeah.
Because the SEC has 4,800 employees that are a watchdog over the securities industry. The reason it's the biggest and the most vibrant market is because the rest of the world, because of those factors, can have confidence in investing in it. Somebody's watching their money.
Right.
So now, leading down that path, you've got the IEO world. Okay. You've got the securities world. And Charlie, I think over time, 2 years, 3 years, 5 years, everybody realizes what has to happen. And I think there's going to be a coming to the middle, almost hybrid security/utility type token that can serve both worlds. On one side, maybe a little less regulated than the normal securities market, but more heavily scrutinized from the total utility token marketplace.
Sure.
So I think there's going to be a coming together, and it might almost produce a hybrid opportunity where a token acts like a stock and a utility token at the same time. Could.
Yeah. I think where a lot of people get tripped up, or there seems to be this, just really negative like rhetoric or feeling out there that security tokens in the US are just going to be held back by this archaic regulation, 100-year-old securities law that we need to update the Howey test in order to make us competitive. I push back on that because in some sense we're letting we're letting Europe, we're letting Asia be the guinea pigs and test this out and perfect the model. And then we'll just come in and in some sense.
Again, just not to hammer the point, but the reason people have confidence in our markets is because of our regulation. And I think tokens should adhere to it. And I think that over time, performance, adoption will prove out. A security token or a real estate wrapped in a security token product, immutable, transparent, auto execution, represented by my neighbor, is enough to provide confidence to the investor to participate.
Yeah.
That's the world. And while everybody out there might be excited about tokens on the other side of the world, okay, what did they want? That market, that crypto market, 25 to 30 years old, okay? What did they want? 10X, go Lambo, 50X. That's what they were chasing.
Right.
But when, again, you look at an asset allocation pie graph, the biggest part of that pie graph, or where your assets should be placed, is in safety and income-oriented vehicles, and the percentage of your assets more heavily concentrated in that area as you get older. Well, there's $250 trillion worth of real estate that looks better packaged in the security token, and that's what we're doing. So that alone, besides all the new product coming out on the enterprise side, bodes well for the strength of the market and what the security token advantages offer.
I completely agree with a lot of that. I think what I've seen is sort of this misuse of the nomenclature regarding security tokens. So you'll see an STO from a company based out of Liechtenstein, and what does that mean? Is that really a security token, or is it just an ICO parading itself as an STO?
Right.
Once we actually see STOs in the US, you will know that is a definitive STO that is equity backed or asset backed or whatever. That's when I feel like this market will see a real flashpoint of adoption. Once we definitively see more and more, it's going to start small like a snowball, and then it's just going to turn into an avalanche as more and more issuers find that it's cheaper, it's faster, it allows you to get more capital right off the bat. And there's even articles like Pompliano talking about eventually the SEC will mandate security token as the default capital formation process. Because
and we said this 15 months ago, but
yeah,
back on it, why might they do that? Because it's much easier that if they can control audit process over the smart contracts that make up the token,
yeah,
they're less likely to have to manage the players of the game.
yeah, absolutely.
If the apple's kosher and can trade, okay, within parameters and guidelines, the SEC now is auditing the token or regulating the token as much as they might be the players within the game.
Yeah. Talking to some of the people at the Security Token Summit a couple of months ago, as like the conversations happening today are by the SEC regarding tokenization, security tokens, whatever. They're just looking for those little points of entry that their points of enforcement is say, okay, if I need to subpoena an issuer that is doing a security token raise, how do I do that? Is there something in the sense of like a chargeback or anything like that? How do we convert all these old processes that we're used to into the new paradigms? That's what they care about. And I think that's going to take a year or two for them to figure that out. But once they're on board, I think the game is going to change very quickly.
We sat with some last November. I had the meeting or the opportunity to meet the director of digital affairs, the president, and a couple other high-level dignitaries in Malta.
Right.
And I proposed, and I knew how far ahead of our time I was when I said this.
Yeah.
I said, guys, realistically, we could build access into the token for the Malta Financial Services Authority to regulate or propose regulation within the token, kind of like sec.gov, require compliance and also provide them an on-off switch to halt trading of the token worldwide. So in extreme levels of lack of compliance or breaking of the regulations, you just turn the token off. And I knew at that point we were way ahead of our time because we were, okay, let's understand what a token is first, right? And a security token. So no, it's all going to get there. It's all going to get there. It's like anything else. I mean, I don't know why we're so flabbergasted by it because, again, going back 25 years ago, a young kid said, hey, maybe we can sell books online. 25 years later, we're repackaging the security into a digital instrument and allowing it to do the same things and even more. That's evolution.
Yeah.
Okay, get on board with it and let's enjoy it. I mean, we're actually we're helping to change the biggest market in the world, the capital marketplace.
Absolutely.
It doesn't get any bigger.
Yeah, I mean, I often look to the fact that, where we are right now, is sort of how technology is progressing. It's just we're combining a lot of these disparate pieces. Even blockchain. Blockchain is, when you look at it, it's actually not a new technology. It's just the combining of the internet, proof of work, which was around, and an incentive model all into one. And it just no one had gotten that formula right before Satoshi. But that's where we are right now. So same regard, security tokens are just combining things we already have and putting it in a way that I think it has a lot of merit, and there's a lot of interesting applications. Once we do have a truly digital, form of equity, an asset like that, where we can you start doing trades on it, you can do synthetic derivatives and things like that. That's pretty interesting to me. Once we take this to the layer 2, start going down that, it gets pretty interesting. So, but we don't want to get out of ourselves. No. It's all about adoption at layer 1 first. And
I think adoption occurs based on the benefits that incentivize whoever is going to bring that or force that adoption.
Yeah.
See, when you look at our model and the market we're going after, it's the issuer who is incentivized to use the tool. For what reason? To improve his own financial status.
Yeah.
That's the motivation. Okay, to improve his own financial status. And in the process of introducing others to participate, security tokens are distributed. So look at that from that angle again, not our competition. Hey, we're doing a security token offerings, come buy these. No, the motivation there isn't. The motivation there is 10x, chase the rainbow, all this. Here it's, hey, I've got a new tool. I've got a new tool upon which I can impact my personal financial status. And if I use it, there'll be more tokens in the world. Now, who wants to improve their financial status? If we can make it quick, easy, cost-effective, okay, low price, low barriers, well, you've got 50 million over here that would say, yes, tell me a little more about it. And then whatever percentage of those want to take advantage of it, we've got to make sure we price it according to, to entertain them.
Yeah. I think it's, the opportunity kind of writes itself. And right. I think that's something, at least in how I talk about this to the base of retail investors that are in crypto or outside of crypto or whatever. It's making sure that the expectations are set correctly, because people keep looking at STOs in the same way that they looked at ICOs or the .com bubble stuff. And no, it's very much more like the actual tech stocks that are still around today. And like it's still very, very parabolic, much longer time frame, but I mean, come on, if you had the opportunity to get into any of those back in 2001, of course you would take the, knowing what you know today. And right. I think we're going to see the same paradigm shift, probably even bigger this time. There's so many different things, like we're saying, it's a confluence of a lot of different emerging technologies, AI, automation, globalization, all these things coming together, blockchain, obviously. That to me, this next round of innovation and adoption of technology is going to be so much bigger than just the internet itself. We're about to see the world, the economy, a lot of things change in ways we've never seen before. And I think it starts with STOs as one example. So it's very cool. It's very cool. So what's got you most excited? Like for you, like having the background that you do, but like being in this every day.
I'll give it to you quick, and it's ironic that you asked this. I got off the phone with Chris, our CEO, yesterday, and it was 10 o'clock at night. I was exhausted. Started early at 6. Mm-hmm. My sons had a couple buddies over. They're in their mid-20s. They're out in the pool. My son came up, and he said, hey, the guys in the pool want to talk about crypto. And I said, dude, just have them watch the video. I was tired. And after I got off the phone with Chris, I said, you know what, I'm going to go down there. I went down there. 7 minutes later, eyeballs are this big. And quick explanation. Guys, we've developed tools that you can use to raise money to finance your personal financial future and your business objectives, real estate or otherwise. We talked for 5 minutes. I came up back to the house, and I called Chris, and I said, Chris, what we're doing here, those 5 kids in the pool, and I call you guys kids, you're 25, 27 years old. You're not kids. I said, you should have saw how excited they were. Chris, we have to make sure we grind everything down to price this thing as low as possible so everybody can participate. We've got the technology built. Now we've got to get the numbers right. We've got to shine it up so that everybody can participate. Because, Charlie, over those years I was in the brokerage industry, I trained hundreds of stockbrokers from Maine to Miami to do what? I taught them how to raise money. Mm-hmm. With this tool and real estate and collateralization, asset backing, cash flow, it's not going to be hard for our instructional site to teach people how to do this, encourage them on how to do it, and open up a teleconference 2 hours a day, every day, where I'll personally take the calls and say, hey guys, do you have any questions? Keep going. package it this way. Here's how you entertain your email database. Here's how you entertain this. Prove some credibility, then go out to the world and do a big offering. You're going to see young guys. This is what get me excited.
Yeah.
Those kids excited yesterday. And what's going to excite me? The first 24, 25-year-old that does $100, $200, $300, $400 million offering for real estate based on the fact that he did 4 or 5 earlier ones at smaller amounts and he proved return.
Mm-hmm.
He rewarded his investors and built that much more confidence and was then able to take it out there in the world. That's what's going to do it.
And, you know, the thing that I always come back to is the fact that the tool set, you know, the tools are there to empower you, as we said. You know, speaking to people my age, making it, you know, making a claim as to the sense of like, this is easier than like taking out student debt. You know, like,
well, the kids, what they do 3 years ago, it's the kids that ruled the ICO market. They came in, they used their phone, they went and got a wallet.
Yeah.
Okay. They went out. Their buddy said, "Hey, I'm making some money in tokens.
Right.
What are tokens? How do I do it?" Boom. They did it and they went.
Mm-hmm.
Same thing here is, hey, instead of buying the tokens, distribute the tokens. Okay.
Yeah.
Leverage other people's money to advance your and their personal financial situation.
Absolutely.
All right.
Yeah, especially as we move more into the sense of like a gig economy, and you know, as you know, full-time employment kind of falls out of favor. You know, empowering people to be their own boss or start their own business, or what, you know, just like even just to finance their freelance work. And I think that's the future.
And all of that said, along with that, what everybody else does for your larger corporations and your medium-sized businesses that want to access capital.
Yeah.
Go ahead.
Yeah.
And we'll help you. We'll show you how.
Yeah. Very cool.
No, thanks.
Yeah. Cool. So how can I help?
You're doing it, Charlie. I mean, I'll never forget our first conversation. I was heading to Delaware, Ohio for a horse race last October. So now you're doing it. Get the message out there. I want people to know to pay attention to our Telegram channel. Mm-hmm. I really want them to know that, because there's going to be a lot of news coming out in that Telegram channel, letting them know what they can participate in without going too far.
Yeah.
Eventually, what that community is going to develop into. Okay, you know, we've done no marketing. Okay, mm-hmm. There's 1,500 people there. Okay, a Telegram channel back in the old world ICOs, those 1,500 people would be pumping each other up about the price of the token. In our community, what they're going to be doing is going to be putting together deals with each other. Mm. Okay, there's going to be 10 guys that want to get together with another 10 guys and do an offering using the PrefLogic tools. They're going to be able to talk about that offering in that channel. Nobody's getting compensated for it. It's just community where people come together and empower each other. And then the new guy will come in and say, "Hey, what's the best way? What do you guys think? Should I package my offering like this?" And state, "Hey, if you're new to this game, give it all to your investors." Mm-hmm. Okay, build your credibility first. And that community will be one that empower others through the use of the tools to benefit themselves economically, not pumping a stock. Think about it that way. So I want, a shout out. How can you help? Really encourage everybody to come to the Telegram channel, ask questions. Just to give you a little preview, in the next 30 days, I'm going to shout out a loud whistle. We're not sure. We might work with 250 to 500 people individually as a soft launch. Mm-hmm. Because what we'd love nothing more than to do is 90 to 120 days out, commercially launch the technology. But then 2 days after that, let the world know that 250 or 500 different issuers are using our tool to advance their own financial status through real estate, through their entry into the real estate marketplace. Now, let's forecast ahead there. Who's calling on that day? Forbes? News? Think about it, Charlie. Yeah. It's a different concept than our competition is going after. And again, I have great respect for probably half a dozen of our competition, but they're doing it the old-fashioned way.
Mm-hmm.
We're going about it this way. And when you could imagine 500 people, where is success measured? Success for that person might only be a $100,000 offering where he purchases his first property. But for that guy like you, who might have 120,000 people that listen to him, he might do an offering of the same ilk, raise 20 million. Okay, but he does that based on the already aggregated audience that trusts him, marketing a product that's asset backed, which mitigates the investor's risk, and he allows them to participate in profit. Now think about that. And after those 500, we track the performance of those 500. They reach their point of success. Where does it go from there? How many is 5? That's a pre-launch, Charlie.
Yeah.
Those are pre-launch. So you want adoption? Is there 500 STOs going on out there right now? No. Could there be? By these issuers? I think there could be.
Yeah.
I think your audience. I think there's 500 to 1,000 people in your audience at 1% penetration who would say, hey, man, if I can afford that and you're willing to teach me, I'm definitely using that hammer to buy my first piece of real estate.
Sure. Yeah, absolutely. You know, I keep coming back to, some of the comments I see on like the YouTube channel and in our SDO group is, like, hey, I was really interested in Pref, but, I've seen they've only raised a certain amount. I'm concerned that they're not successful or something like that. And, I think what I need to do in talking about the current state of the STO market, or just what separates STOs versus ICOs. ICOs were measured by their market cap. They were measured by, how much money was being pumped into them. And it was completely arbitrary to the success of the project. You could have projects that raised $100 billion, $1 billion, and they still no product, nothing but a white paper and a promise. Whereas, there's a great little infographic I saw the other day that listed all the different STO issuance platforms. I think it was posted in I don't know, whatever. It showed, here's the amounts raised by all these projects, and I think it's completely, well, it is somewhat relevant, but I don't think it's as relevant as how many issuers are going off of them. How you can raise all this money, but if you're not attracting
Charlie,
issuers,
I'll ask you a question, okay? Because you're involved with PrefLogic,
mm-hmm.
right? All right, raised nearly $1 million. Haven't marketed it. Let me ask you this. Do you think the investors would have rather us build technology, okay, create partnerships, and I'm going to tell you about one in a second, with 400 of that million, or would they rather have us taken 400 of that million, spend it on marketing to raise more money at a higher market cap in a private setting where they had no ability to get liquid? I'm a believer in sales. Okay, mm-hmm. we have squeezed every dollar as hard as we can. Our goal is to raise up a couple, 3 million more, okay, and cut it off there. We've done everything we can to keep the market value low and raise as little as possible, so we're not offsetting or overly diluting ourselves or anyone else, okay, and keeping a nice tight structure. But one more offering, let's just say off of those 500 customers, little guy issuers, okay? What if we only netted $500 or $1,000 in profit? How's $500,000 in company earnings stack up against all the STO big offerings that aren't getting closed right now?
I would say that would put you at the top of the list of the ICOs too.
And you know what? They're positioning themselves more so. The competition is positioning itself more so as a traditional broker dealer.
Right. Yeah.
Charlie, The audience we look to serve by providing software that helps them get somewhere easier, faster, quicker.
Yeah.
We're not looking to take down fees for the money they might facilitate through our technology. Here's the tool. Here's how you put it to work. Here's how all of this has come together to empower you. Go use it. And we're talking about, at the smallest point, a 50 million person market in the United States that could benefit from it. Couple that worldwide. I think we'll sell more software and empower more people than our competition does in total number of offerings made.
Yeah.
It's all how you measure success. It's all, and I believe they're all going to be successful. I think we will be too. No, it's just different. We're going about the market a different way.
Right. I think one of the biggest mistakes that I'm seeing, or that I perceive right now, for the competition, or how a lot of sort of enterprise level solutions are being built for security tokens. It's trying to digitize Wall Street, and
100%.
What we're gonna find. I mean, like, honestly, why does anyone shop at Amazon? Yeah, sure, it's nice to see the reviews on stuff, but it's also because it's the cheapest place to buy stuff, and you get like unlimited competition. There's nothing there that, like, if you have a choice of 50 different products, you're going to choose the cheapest one with the best reviews. You don't give a shit about, like, you don't have brand loyalty. All you're there is to pick a product and, add it to cart and check out.
You want what you want, and you want to go get it. I mean,
so in a land of the internet, in a land of digitized processes, and a land of digital issuers and digital tokens, I think it's more about what you can provide at the cost basis, the value add that you can provide. Again, the KPIs,
the benefit to the consumer.
Exactly. So it's just trying to attract big fish right off the bat. I think it makes sense from trying to attract these like big investment firms.
Well, they have to. Hold on. Anybody that's raised the type of money that our competition has, is whether it's 12.75 million, whether it's 59 million, whether it's 38 million, they had to do that at fairly massive valuations coming out of the box.
Yeah.
Okay, now they don't want to be telling their investors they're going to sell $1,000, $2,000, $3,000, $4,000 product.
Yeah.
Market that might only be 5,500 issuers deep, because there's no way the revenue or income or metrics of value will drive that representative share of stock or token to a point that would satisfy the offering price.
Right.
We're okay. $10 million offering, $10 million market cap, apply a 50 to 1 or 100 to 1 PE ratio to that. And how many copies of software do we have to sell? Well, you could probably, your user group would buy 10 times more than we needed to justify value.
Yeah.
We wanted an easier road to hoe. We wanted to be lean. And again, wired the way we are. I think when you're looking at a company, what matters most is profit.
EBITDA.
What's driving the value of what your investors own?
Yeah.
Not hype.
Yeah.
More money coming in than going out. That's what we seek.
Yeah.
And we look to seek that through empowering a huge audience.
Yeah. It's long-term sustainable. Right. You are still able to entertain those big clients. And if you have a basis of consistent income coming in, that just betters your ability to attract big fish like that.
Yeah. What did Facebook do this week for all of us, right? It legitimized things.
Right.
Okay, what if President Trump dropped the Trump Towers into a security token? Instantaneous adoption if it went at a fair price, fair return, and could be evaluated.
Yeah.
Our attorneys have written memorandums for tier 2 brokerage firms, okay, who are doing a typical offering, a unit, okay, say $500,000 unit offering in an LLC, shopped the traditional way, where they've got an ancillary product or subsidiary feeder product that provides the same or nearly the same benefit to the investor, only in token form. So just to further explain, take a traditional broker-dealer who's marketing a traditional product, an LLC in unit form, okay, to the traditional audience. But then he staples on a security token and says, hey, if any foreign buyers want to participate, or if anybody in the US would prefer a token rather than, or his investment represented in token form rather than in traditional unit form or LLC form or partnership form, then you can.
Yeah.
That's another way adoption could occur. It's going on as we speak. So yeah.
Yeah. Oh, it's very cool. Yeah. What strikes me?
And tell your audience too, don't worry about us. If we were worried about raising a lot more money, we'd be doing a lot of promotion. To date, we haven't spent a dime on advertisement.
It's more important about getting the product and the message right. You know, I think it's such folly to like always have this. You know, if you're not like raising millions of dollars, you've failed as a business. I think that's so short-sighted because if you don't have a product, if you don't have a user base or any way to like anyone using that product, it doesn't matter. You know, so yeah,
I'd rather attract capital through product sales.
Yeah,
than the sale of equity.
Absolutely. Yeah. Oh, very cool. All right. Well, yeah, this was very productive. I think we got some good material here for a couple of videos. So I appreciate your time.